this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka. Well, it was a day of consolidation after the kind of rally that we saw on Friday. It was a fantastic Friday because we ended above that 24,500 mark. Today, we did reclaim that 24,600 mark in intraday trade. But, we didn't really manage to hold on to those levels. So, the Nifty ended pretty flat with a positive bias although. So, 24,572 was where the Nifty was at. The Sensex although ended in the negative zone, marginally so, managed to hold on to that 80,400 mark. The broad end of the markets also came off the day's high. When I talk about the broad end of the markets, I am talking about the mid cap index. That index was up somewhere around 0.2%, but there was a lot of action in the small cap end of the market because the small cap index was up almost 2%. If you look at the breadth, the market breadth, that was firmly in favor of gainers. On the NSE, the advance decline ratio was almost 3:1. So, 1792 shares advancing to 660 shares declining. So, the breadth was also extremely strong. Talk about the sectors that did well today. PSU pack was leading from the front. Oil and gas pack was doing well. So, you had your OMCs doing well today. BPCL was among the top Nifty gainers. Aside of that, what did well was the metal pack. That was up over 1.5%, and IT, that was one of the pockets that was leading from the front on Friday, and today as well, it saw follow through buying coming in. So IT was also among the performers today. On the flip side, what was out of favor today was the entire auto pack. Given the fact that M&M was among the top laggards on the Nifty. Aside of that, you had banks also, under selling pressure. Of course, banks have seen. They have remained under selling pressure and they have been sort of underperformers in the market, but not for PSU banks today. It was the private banking lot that was under pressure. So, in terms of individual movers on the Nifty, as I mentioned, the metal pack was doing very well today. Hindalco was the top gainer, BPCL the second best performer on the Nifty today, and so was Shriram Finance. That stock hit a fresh 52-week high. We had a note from HSBC, a bullish note, and the stock was of course reacting to that. Other metal counters that did well, were the likes of Tata Steel as well as Coal India. On the flip side, autos and banks clearly under pressure. So you had M&M and Bajaj Auto from the auto pack that were among the laggards. Axis Bank, IndusInd Bank, these were some of the other losers from the banking pack. Tata Motors as well. Among the losers today. Talk about the broader end of the markets. Caplin Labs, that stock was up almost 18%. Godfrey Phillips was the other one. IFL Finance, Triveni Engineering. These were some of the movers on the Nifty 500 index. On the gaining side, on the flip side, you had the likes of V-Guard, Mazgaon Dock, Hindustan Zinc, of course, saw an OFS from the parent where they exercised the green shoe option as well. Kalyan Jewellers, that was the other one that lost some bit of shine today. So, to understand, what the texture of the market is looking like, after, a strong up move on Friday and the kind of sell on rise, scenario that played out today, whether or not we will remain in a range or in consolidation, let's bring on board our guest for today. Ruchit Jain of 5paisa.com is joining in to help us understand where the market is headed from here. Ruchit, always a pleasure chatting with you. Welcome to Closing Bell. First of all, we did see a phase of consolidation given the fact that, global scenario was pretty volatile. But now, there is normalcy in the global market as well. And on Friday, we saw a very strong up move coming in. Today, we started out on a great note, but, towards the end of the day, of course, we fizzled out. So, here on, would you expect us to remain in that sell on rise mode or consolidation mode throughout the week? Or do you think there would be bouts of buying coming in and we could see levels of 24,700 this week itself?
Yeah, hi, very good afternoon, Nandita. Well, Nanda, if we see markets in this entire month of August so far, then initially we witnessed that price-wise correction from the high of over 25,000 when the global markets saw some volatility. But last 1 week we have managed to take support around that 50-day exponential moving average on the Nifty. And we have seen some broader markets recover in last couple of sessions. In Friday's session, the broader markets did quite well. Today, although index did not see any significant up move on the Nifty front, but if you look at the market breadth was still strong. So this clearly indicates that the price-wise, until now we see breakdown of any kind of important supports, I think the price-wise downside seems to be very limited. And we could see a good stock-specific momentum in the rest of the week this week. So on the downside, we are watching out for that support of 20,400 to 350 range for now. till that is intact, I think any kind of intraday dips if we get, that could be a good buying opportunity on the index. And on the higher side, know that 24,650 is the initial resistance, where even today the index did not surpass that level, which is a 61.8% retracement of this recent fall. So once the index manages to surpass that, then I think 24,800 or even 25,000 would be seen in the very short term. So as of now, does not seem that markets would see any significant price-wise correction in the near term. I think there could be some consolidation in the index, but the stock-specific momentum indicates that the overall biasness continues to be, remain bullish.
Okay, the overall trend remains on the bullish side, but one pocket that has been underperforming has been the banking lot, right? The Nifty Bank Index today as well. Private banks were under pressure, but it's the PSU Bank Index that garnered attention today. There was a meeting with the finance minister between with the PSU banking chiefs. So a good up move coming in, almost 1% or thereabouts on the PSU banking index. Within the PSU pack, the likes of SBI, Bank of Baroda, all of these stocks have given negative returns over the last 1 month. Anything that's worth buying now from the PSU banking lot? In terms of risk reward, is it looking attractive, some of these stocks?
So Nandita, I'll start with Bank Nifty first, then I'll move on to PSU banks. If you look at the Bank Nifty index, there has been a relative underperformance in the Bank Nifty index of late. And since last 8 or 10 trading sessions, this index has seen a very range-bound move. It's a broad range of 100,000, 1,200 points, where 2 or 3 times the index came near that 49,650, 700 range, but did not break that. But on the higher side also 50,850 is acting as a resistance. So I think next directional move in the Bank Nifty would only be seen once we see a breakout either above 50,850, where the trend would turn bullish, or below 49,650, which is last couple of weeks low, that is broken, then that would indicate a continuation of the downtrend. So for the banking space, we are still in a wait and watch mode, and we would wait for a breakout on the either side on the Nifty Bank Index before trading in a directional move in the banking space. But yes, if you look at stock specific moves, then the PSU banks have already seen a good amount of correction since last 3.5 months. Post the elections results correction which we saw, many other sectors have formed new record highs, but PSU Bank was one index where we did not see any kind of run up towards the previous highs. So there has been a decent corrective phase in which the index has gone through. So I think there could be some pullback moves in the near term. Pullback moves could be seen in stocks such as Bank of Baroda is there, PNB is there, and to an extent even State Bank, the momentum readings are showing positive cross in the oversold zone. But ideally, until we see a breakout in the Bank Nifty above that 50,850, which is last 8 to 10 trading days range, I think the momentum in the banking stocks would not be very sharp. So PSU banks, yes, one can do some kind of bottom fishing, but I won't take 100% exposure over here. Only if we get a breakout above that 50,850 mark, then I think these banking names would come to limelight.
Right. But I want to get in your attention on HDFC Bank. It had started to see good traction, but then the MSCI inclusion in 2 tranches came as a bit of a disappointment. But the stock has managed to defend that 1600 level. And recently we've had brokerage houses like Motilal Oswal and Kotak Equities saying that they see over 13% upside potential from current levels. In fact, Motilal Oswal has also said that near-term growth may remain soft due to high credit deposit ratio. But Kotak Institutional has noted that it will gradually move away from the derating phase, and in fact it can even enter a phase or period where it could see a re-rating. So on the charts at least it has managed to defend 1600. So here on, what kind of resistance level should one work with when it comes to an HDFC Bank, and is this a good time to accumulate?
So the stock has been consolidating since last 2 weeks. 1580, 1600 has acted as a good support range in this consolidation. And I think if the stock manages to hold this level, then we could see a bounce back again towards the 1700 mark. So yes, the risk reward issue is favorable to create fresh longs over here. Now the move from the 1630 to 1700, how the volumes pan out during that up move, that would be the key thing to watch out for, making a guess whether it would see a continuation of the uptrend further beyond those levels. But for now, yes, at current levels, the risk reward ratio is favorable because the stop losses are not much big at current levels. Keeping a stop below 1580, I think one can take a fresh buying attempt at current levels in HDFC Bank.
Okay, that's the view on HDFC Bank. Another one from the NBFC space is Shriram Finance. The stock, hit a fresh 52-week high today. It's been doing well in the last 1 month. It has given double-digit returns. Of course, we have brokerages, coming out with the positive reports. HSBC, flagging off a 17% upside going forward. Buy rating there 3,600 is where the target price is at. And HSBC has also said that the company is in the most convincing operating period in over a decade. So these are some very bullish comments coming in on this particular stock. How is the RSI looking now? On the charts, would you say there is more upside? How should one approach?
Yes, I think overall trend remains quite strong in Shriram Finance. In fact, if you compare this stock in last 15-20 days along with the broader markets or what has happened to the stocks within the same sector, then a clear relative outperformance can be seen in Shriram Finance, where the corrections were more of a time-wise correction. All the minor dips that we got along with the broader markets, we have not seen any kind of volume-based sell-off in the stock when the stock prices had corrected. And now when the stock has resumed its uptrend, the volumes are good when the stock is going up. So I think the structure remains quite positive. If we take retracements of the recent correction, then for the short-term targets for the stock are coming around 3,170, which is not much far from current levels. And above that, we can see retracement getting towards extended towards 3,320. So I think 3,170 and 3,320 from a near-term perspective, these are two targets that the stock could achieve.
Okay, that's the view on Shriram Finance. But metal stocks were shining bright today, Ruchit. Anything that's worth a look at right now? Hindalco was, of course, the top mover on the index. I think Tata Steel was also one of them. We've had a negative news flow in terms of the taxation, etc. With the retrospective effect. So, would you look at some of these metal counters after the weakness that we saw?
I think as very selective buying could be done because these stocks too have seen a recent correction from the recent swing highs. And Hindalco, I think, would be one stock where outperformance could be expected from stocks within the sector. So where we have seen that today the move was supported by good volumes. From that oversold zone, the RSI has given a positive crossover. So possibly we could see a move again towards 700, 720 range in the near term. So if one is looking for taking any fresh exposure within the metal space from a trading perspective, then Hindalco I think should be bought at current levels with stop below 630 for potential targets around 700 to 720.
Hindalco, of course, looking good within the metal pack. Be selective. That's the advice coming in. BEML, that stock was in focus today. Cabinet has cleared some metro projects in in a host of cities, including Bengaluru, Pune, as well as Thane. But if you look at some of these rail stocks, they have seen a fair bit of consolidation. For BEML in particular, I think we have seen a 17% kind of a downtick in the last 1 month. Are the charts suggesting more correction going forward, or do you think this is a good opportunity to buy, and perhaps here on we could see some bit of a reversal on the charts?
Well, we have not seen any kind of high volumes in this correction when the stock has corrected from about 5,400 to 38, 3,900 kind of range. The volumes are not that very high, so which is a good sign. But I'd wait for a breakout above 4,250 to 4,300, which is a major resistance on any kind of pullback move. So even if you look at the most of the defense name, from a near-term perspective, it seems there would be some consolidation in the defense stocks where the overbought setups which are there on the weekly and the monthly charts, they are in the process of getting pulled off. So I think there could be short-term phases of consolidation in BEML as well, where 4,200 and 50 would act as a resistance, and on the lower side 3,500 would be a good support. So it's a range bound move. One can wait for a breakout before initiating fresh longs here.
Okay, wait it out before initiating fresh longs on a BEML. But what about a Voltas? Stock was up 5%. We have mixed views on the street about this particular stock, right? But it's the UBS report that the street really latched on to, because they have a buy rating target price around 1960 or thereabouts. Of course, the company has strengthened its position in the room AC segment, although Q2 is likely to be a lean period. That's what the management has indicated. So we could see some bit of earnings dampener perhaps in Q2, but demand outlook remains optimistic for this company. So on the charts, I think it has seen good traction in the last 6 months, 25% kind of gains given here. But would you be on the bullish end or would you be on the bearish end when it comes to Voltas?
The technical structure is bullish because we have not seen any kind of price-wise correction, but in fact, whatever consolidations were there now of about 1.5 months, the entire consolidation panned out above its 89 EMS support, and the prices have now indicated resumption of the uptrend. From a near-term perspective, 1700 to 1720 is the range where the retracements would come in of previous corrections. So that's where minor resistances could be seen. But overall, there is no signs of any bearish momentum or any kind of reversal in the stock. So better to trade along with the direction of the trend, and that is looking bullish.
Okay, the overall trend on the charts of Voltas remains bullish. But now, one stock that has been in focus, Zomato. Of course, yesterday, the Blinkit orders reached an all-time high on Raksha Bandhan Eve. And today we have UBS raising the target price to over 300 rupees. 320 is where UBS's target is. The stock has literally tripled in the last 12 months. 300 levels, do you see that becoming a reality pretty soon? Today, of course, it didn't hold on to its gains, but would you see more or higher highs here?
So there's no doubt about the trend for the stock. Last few months consistently the stock has been moving higher. Any corrections that we witness, a good buying interest was seen over there. But the momentum readings are a bit overbought for taking fresh long positions over here. So I would suggest that in case if anyone is holding existing long positions bought at lower levels, then they should continue to ride this trend. But for fresh buying, I would say keep a buy and dip approach rather than chasing the stock. 230 to 235 is the initial support range. So if we get any dips towards that range, then one can review the stock for fresh buying over there.
Okay, that's the view then on Zomato. But one stock that's been the talk of the town is Ola Electric. I know there is no historical data to go by, but given the fact that the stock has nearly doubled since its listing just a few days ago, the stock of course hit an upper circuit today as well. Would you advise booking profits here at the current juncture?
Nandita, frankly, very difficult for me to take any guess on this stock because of just recent listing it is. But yes, it's good that if you are getting good profit, then you can keep some trailing stop loss where below the previous day low. If that gets breached, then you can look to book profits on your existing long position. So riding this trend with a trailing stop loss method, I think could be a better way.
Okay, that's the view. Talking about an Escorts Kubota now, the stock was in news given the fact that it is planning on an investment worth, a greenfield investment worth 4,500 crores in UP. The stock has given negative returns over the last 1 month or so. But would this stock excite you, Ruchit, Escorts Kubota?
And this is a correction within an uptrend because if I look at the mid to long term charts, there is no change of trend over there. But just because of the overbought setups in the month of June, we have seen that some correction along with the markets have been seen. But I think if one is looking from a bit mid to long term perspective, then one should look these dips as a buying opportunities. Major support for the stock is placed around 3400 to 3500 zone. So in case if we say get some more corrections in that 3400, 3500 range, then the risk reward ratio could become favorable for taking contra buys over there.
Okay, that's the view then on Escorts. But since we are getting some queries, I thought might as well address them. There's a query coming in on a Suzlon from Ruchit Jain. He wants to know your thoughts. Of course, the stock has seen very good traction last 6 months. I think it's been a 75% up move. 1 month itself, it's off 50% gain. 100 kind of levels, 100 levels are being talked about on this stock. 52-week high was placed at somewhere around 84 rupees or thereabouts. How soon can this 100 rupee become a reality for a Suzlon?
The kind of momentum that the stock has been in last 1.5 months, it is quite possible that the stock would touch that 3-figure mark going ahead. But one needs to see the risk reward ratio perspective also if one is looking for fresh buying, just for that 3-figure mark. If I look at the supports, then major support for the stock is now placed around 65-70 range. So 65 to 68 range. So the risk reward ratio for fresh buying, I think it's more of 1:1. So if one is looking for fresh buying interest, then if we get any kind of dips in the near future, then take this dips as a buying opportunity rather than chasing at here current levels. But yes, existing positions are there. Then you need not worry much about until we get any signs of reversals. One can continue to hold on their existing ones.
Today's breakout stock, Caplin Point, that stock was up almost 16%. Thanks to today's move, I think the stock has managed to clock in gains of somewhere around 25% in the last 1 month. Hit a 52-week high today. Would you see more up move? Is it a breakout stock, and is this breakout going to continue going forward?
Is quite possible because the breakout today which was seen, although it's based on news flows, but the volumes are quite high compared to its daily average volumes. So this is a sign that we could see that 2000 levels, in next few trading sessions itself. So overall biasness or the trend still remains on the positive side for Caplin Point.
Okay, overall trend is on the positive side. Just getting a couple of more queries since we are, getting these queries, might as well get them addressed. Aditya Reddy wants to know your thoughts on Adani Green. Can he look to enter for the long term at the current juncture? Would you advise?
Yes, probably yes. No, because we have seen a decent consolidation phase. Recently, the volumes have started increasing gradually. The RSI is showing some positive traction. A bit volatility is there, so I won't advise. I would advise to strictly keep some stop losses. And the major support for the stock is around 1650 to 1700 range. So keep a stop loss below that 1650 mark, and you can initiate fresh longs around current market price as well.
Okay, one last query. This one is on a PNB Housing coming in from Alex. The stock hasn't done much in the last 5 sessions. Also, over the last 1 month, the gains have been fairly muted. What kind of levels should you work with on the higher side?
So I think this is more of a consolidation phase. But if I compare this stock with LIC Housing Finance in the last 10-15 days or 5 days which you are talking about, then it has relatively managed to do well. Because LIC Housing Finance has corrected from high levels, whereas this stock has not seen any kind of price-wise sell-off. So that comparative analysis shows much better picture than individual stock movement in last 5-6 trading sessions. But yes, the 760, 770 is a good support range for the stock. So till that is intact, there is no negative sign in the stock. So if you have long positions, the momentum is definitely missing because of the lack of volumes, but the supports are still intact. So 760, 770 is a good support range for the stock. You can hold on your existing long positions here.
Okay, that's the view. I hope that answers your query. But before I let you go, Ruchit, what would you be keeping on your radar for the coming week, for this week rather, in terms of recommendations for viewers? Anything on your radar?
So one of the stock I think we already spoke about is Hindalco. So I think if metal manages to recover from current levels, then Hindalco can do well in the near term. So one can look for buying opportunity over there. And secondly, I think IT has been doing quite well. So that could continue its up move. So within the IT space, we like HCL Tech because a high top, high bottom structure has been there in HCL Tech, which indicates a continuation of the uptrend. Even TCS, Infosys. So most of the large cap IT names are looking positive even at current levels. HCL Tech for fresh buying, one can consider with stock below 1620 for potential targets around 1780.
Okay, large cap IT looking good, HCL Tech and Hindalco, the other one. With that, Ruchit, would like to thank you for taking out time and joining in this afternoon and sharing your thoughts with us. Look forward to interacting with you again sometime soon.
Thank you very much.
Thank you. Well, that was closing bell then. We ended the day, off highs, of course, but we did manage to end in the positive zone for the Nifty. Although the broader markets saw quite a bit of action with the Nifty small cap index, closing or ending higher by about 2% or thereabouts. But of course, with that, we are completely timed out on this edition of Closing Bell. Of course, we'll see you tomorrow again at 9 a.m. on Opening Bell. Don't forget to tune in. But for now, it's a goodbye from me and the entire team that put the show together. You guys stay tuned to Money Control for all your other news and updates, and have a great evening.